Welcome to this week's Todd Talks. I'm going to cover key points in the marketplace this week, some key takeaways to help you make a great decision in buying real estate. So first up, let's take a look at the headlines. Headlines right now are making it sound like there's a full-blown housing crisis happening. I'm going to debunk all of that. It's not a crisis at all. It's sort of a normal market. But let's look at some actual data, and including, we're going to finish off by exploring some opportunities out there as well. So let's start by what's going on with sales, the actual price of homes now, and buyer trends. Okay, so the first one, two trends working right now for buyers. Number one, more homes are for sale than any time since June of 2022. That's the highest inventory since June of 2022. And what that means is there's more choices and more negotiating power. That's a good thing. Coupled with that, check this out, lower prices. Prices are down $11,000 than a year ago. So that's a big deal. Now, does that mean a housing crash? No, that doesn't mean a housing crash. It means the market slowed down, it settled down. I mean, we were on a frothy market for like a decade, and then we had this COVID ramp up. Then we had high inflation, and it settled everything back down. And the market's sort of just sitting there moving along. There's a ton of transactions going, but from a buyer's point of view, this is like the best time I've seen to buy since before 2012 in terms of being able to negotiate and having choices. So let's look at foreclosure numbers, because that's a big talk lately. Let's see where they're actually at. So we're not going to let foreclosures headlines fool us. Foreclosures have only increased slightly. So look at this. This is housing crisis foreclosures. First half of 2008, 1.3 million. This is current foreclosures, first half of 2026, just $200,000. So that is far fewer than what you would think based on headlines. The fact is that homeowners have more equity than they've ever had. A full third of the homes out there are owned free and clear, and another like 45% are have significant equity, and the rest are people that have bought in the last few years. And keep in mind, when they talk about foreclosures, what ends up happening, and I've been harping on this lately in my Todd Talks videos, that's really become a key thing I think that we all suffer from now, is we're all used to getting our news from YouTube or social media, whatever your favorite social media is. And it's where you have these content providers that they need to produce content, and very little of it's based on data. So they'll take like a headline or one piece of data. They're not housing data analysts. They don't really analyze it. So for example, if there was 100 foreclosures last month in a certain market and 200 foreclosures the next month in a certain market, you could say, oh, foreclosures doubled or foreclosures are skyrocketing. But if that represents like 1/10 of 1% of the overall market, then it's completely misleading. And that's what happens. So you gotta be real careful about where you get your news from. So now let's look at some opportunities. So affordability is the number one challenge people have in today's market. 4 years of really high inflation, inflation starting to come down, gas prices, being up because of the war, and then you've got, and then you had prices go sky high during COVID. It created an affordability crisis in the United States, and that's starting to wane. Incomes are actually up the last 2 years, significantly higher than the rate of inflation, so that's helping that. But there are some hacks you can do, some house hack strategy. One is condo versus single-family homes, or even townhome versus single-family homes. And if you look at, there's a $66,000 gap right now between. So you can buy a single-family house, the median price is $446, but for a condo or townhome, it's only $380. So that's a potential house hack for you to be able to bridge the affordability gap and still own some real estate. And then one more opportunity in the marketplace. All right, so if you're looking to do a move-up buy, so you own a home, you want to do a move-up buy, there aren't nearly as many starter homes for sale. And if you look, this is the overall inventory, this is the starter home inventory. It's just a significant gap. And so what that means is that if you have like that first home and you have significant equity, you'll be able to sell it for a really good price because there's fewer available for that starter home inventory. Grab that equity and make that leap into the move-up market, which that leap into that move-up market, you take that equity and you're moving up. You're moving into a market that has way less competition right now. Price is stale. The seller's willing to negotiate and whatnot. And the thing is, if you're going to sell, regarding whether you're in that starter category or you are in that move-up category, you can sell any piece of real estate. It's about price. So you have to work with a great real estate agent that understands what the 30-day price. And that's what you want to ask. The question you want to ask is, what price do I need to get on this house to sell it within 30 days? And then the next thing you should do is you have to be working with a really great mortgage lender. I happen to be a certified mortgage planner. I build mortgage strategies. So I might be able to figure out how to structure your finances and purchase in such a way that you might not think of. In fact, that most other loan officers would not think of. And then you could take advantage of the current market and not have to wait months or years to make a move you've been thinking about moving. So if that interests you, reach out, give me a call, shoot me a text. I'm here to help you. So I hope you found this information useful. We'll see you next week, and I hope you have a great weekend.